Hello, everyone. I want to welcome you to the Women Veterans Alliance, our Wednesday webinar series. And my name is Melissa Washington. I'm a Navy veteran, and I'm the CEO and founder of Women Veterans Alliance and Women Veterans Giving. And I wanted to welcome all of you here today. And as you saw from the reminder email, that we do use and have been piloting an app that pretty much gives us feedback on the event. So if you're on the app, you'll see WVA, you'll see the unconference, and you can give a thumbs up. You can slide the slider. Just let us know how you're feeling throughout this fantastic presentation. So my name is Melissa Washington again. Women Veterans Alliance, if you haven't heard of us, we are a nationwide organization with our primary focus is to connect women veterans with each other and resources. And that's what we are doing here today, is connecting you with each other and resources. And so if you are not connected with us, we are on Facebook, Twitter, Instagram, Pinterest, LinkedIn, and YouTube. So feel free to contact us through those channels as well. And if you're not a member, feel free to join Women Veterans Alliance, and you can do that on our website. If you haven't seen, we've got some new branding, some new stickers, which are also going to be, some of these will become shirts and hats. And you can visit our store for different apparel, from jewelry to hats to shirts. So hopefully, if you haven't heard, or if you've heard of the Unconference, that is our annual signature event that takes place once a year. And this year it'll be October 8th through the 10th at the Tropicana Resort in Las Vegas. And if you have not been to the Unconference, I get it a lot, and people say, why is it the Unconference? Well, it's not your typical conference. And I did want to share some pictures, because when you go to a conference, you may not find a painting class, you may not find headshots, you may not find equine therapy, you may not find the VA providing flu shots, makeup, new clothing. We have it all at the Unconference, again, October 8th through the 10th. You can visit womenveteransunconference.com if you have not registered. I highly recommend that you do. This is our 6th one, and we have a lot of women that utilize this event for their annual reunion. Also, too, if you don't know, we have our Women Veterans Giving is our nonprofit arm, and you can donate. You can just text 26989 WVG to donate. And funds that we receive help send women to conferences, not only our Unconference, but also too, we have an annual small business award that we hand out every year. To date, we've given over $10,000 to women veterans to help her expand or start her business. Applications will be coming up soon. So funds that we receive from donations and other fundraisers go to helping her get there. So today we've got our webinar. We have webinars scheduled all the way through August, and you can visit our website webinars to see those different ones that are coming up, and you can register there. But just to share what we have going on in June, we won't have one next week, which is June 9th, as I will be at the CalVet Leadership Summit in San Diego, but we'll resume back June 16th with the financial freedom. And then June 23rd, Karen's gonna be doing what do these shoes do in addition to killing witches? And Robin on June 30th will be presenting Finding You After the Military. So these are just the ones coming up in June. Feel free to visit the site to check out June, July, and August, and you can sign up via there. All right. So without further ado, I want to introduce our presenter. And I'm in California, Rebecca's in New Jersey, and we met 2-3 years ago. Stryker Medical had asked me to come out to be one of their guest speakers at an event, and Rebecca was attending the event, and we connected, and here she is today to share all about using your VA home loan benefits. So I just want to share a little bit about her. Former U.S. Army soldier who helps military family and friends with relocations, selling, buying, investing, or renting a home. She's available for workshops, seminars on the VA loan and the home buying process. She provides complimentary home evaluations and discounted rates for military families. And she also places homeless vets into apartments and helps them with long-term planning to go from homelessness to ownership. And without further ado, I'd like to introduce Rebecca. All to you.
Thank you, Melissa. Thank you. Hello to everybody. Today we're going to be talking about the VA loan. That's a benefit that you get And I also want to introduce you with some of my team members. Mitch Levine is a loan officer, and he is going to be talking about the VA loan, because the VA, since it is a government entity, they themselves don't give the loan. They partner with different banks throughout the country, and the banks themselves or mortgage companies will offer the VA loan. Mitch, do you want to take a couple of minutes and introduce yourself?
Sure. Hi, my name's Mitchell Levine. I work for Cityscape Mortgage. We're located in New York. We deal in New York, New Jersey, Florida, and Pennsylvania. And as Rebecca mentioned, the VA loans go through, the VA doesn't actually underwrite the loans, they go through the mortgage companies. And because of your status as veterans, um, you have certain benefits that sometimes you're not aware of to get these loans. And I don't want to get into a whole big thing about it now. I'll let Rebecca speak. But I mean, the big thing and one of the first questions I'm normally asked is it really possible to buy a house without spending any money or putting any money down? And the answer is, for a veteran, it is. You most certainly can do it. We do it all the time. I've done it with Rebecca, and I'll be happy to talk a little bit more after Rebecca's done and take any questions you might have afterwards as well.
Thank you, Mitch. Also, on my team is Leonard Boyer. He is an attorney. He specializes in bankruptcy, mortgage foreclosure defense, and other things like that. Leonard, do you want to take a moment to introduce yourself, please?
Certainly. My name is Leonard Boyer. I didn't serve in the military. I came close, but my parents were both union members, and I've always represented homeowners, never represented banks, and I enjoy, leveling the playing field. Uh, a lot of people have misconceptions about foreclosure, forbearance, and there's a stigma attached to bankruptcy, but realistically, bankruptcy and Chapter 13 and the bankruptcy court's mortgage modification program, if it's available in your state, can make all the difference in the world between keeping your home and losing your home.
Thank you, Leonard. So the first slide that I put on there is a little poem on women veterans. And the reason I put it up there is because, number one, I thought it was good. And also, a lot of time women veterans, people don't know that we're veterans. They think we're a spouse of a veteran. And so I thought it was good that this poem portrayed us in a good light, since we're always being asked, did your husband serve, instead of if we served. Can we go to the next slide, Melissa, please? Okay, so some of the things that we face as women is maternity, right? Sometimes we have to stay home, take care of the children. If we're single moms, we're head of households, we're caretakers. Some of these issues also are for men, but maternity and things like that. And what I want to talk about is sometimes if we're cohabiting with someone, if we are not married, the VA does not allow a veteran who is not married to go on to the VA loan, okay, except if that other person is a veteran themselves. So two veterans can get into a VA loan. However, if the one person is the veteran and the other one is not, and they're not married, then that person cannot get onto the VA loan. Mitch, you want to piggyback on that, or?
Oh, sorry. No, that you're correct on that. And obviously, there have been domestic partnerships, and that question comes up a lot, but it is not allowed by the VA unless they are legally married.
Okay, I got a question that's asking, are two unmarried vets can go on the same loan? They're both veterans.
Yes.
Yes. Now, this is another situation. You can have a veteran on the loan, and if they want to put a family member, okay, there is a loop. There's a loophole. If you put a family member like a father, or a brother, okay, that is not a veteran onto the VA loan, they have to pay the down payment, their portion. The only person who does not have to pay a down payment is the actual veteran themselves. But if you want to put your brother or your father, someone like that, and they're not a veteran, they have to put their portion of the down payment. So an example would be if the house is about $300,000 and the down payment is going to be $10,000. Mitch, are they responsible for the $5,000? That would be half of the down payment, their half,
Yes,
right?
yes, correct.
Okay, and that's something that a lot of people are not aware of. But many times what we get are we get people that are cohabiting, they're not related, they're not family, although they are like common law kind of, but the VA says you have to be married in order to, but what people do is they can put them on the deed. Is that correct? After they close, Mitch?
Yes, they can be on the deed.
So they have to close on the house first. They purchase the house, and then after they go and do like a quick claim.
Yeah, yeah, they do a quick what? I'm sorry, I didn't hear what you
It's
said.
maybe Leonard. Leonard, is it a quick claim? They put the deed, the person on name on there.
A quit claim deed can be used, but generally I would advise against it, because if you put somebody on that doesn't have a financial interest, and God forbid anything happens to them, the house is an asset that can be lost that way. And generally, we see quit claim deeds when people are divorced. However, most mortgages have a due on sale clause, and a quit claim deed can sometimes trigger that, but it would depend on the lender and the state and the circumstances. But
Okay, I
I would
have a
in general advise against it.
Thank you, Leonard. So what do you know, Mitch, why there would be a situation if somebody refinanced their VA loan and they wanted to add their son to the deal and it would be denied?
I'm trying to think. I'm looking at the question and
Oh, okay. You see, everyone, this is a question that we just received in the chat. Someone is asking that if they refinance their home and they want to add the son. I don't know if the son is 18 or 21 years old. I mean, I know you have to be a certain age. Or maybe the credit, maybe there was, I don't know, Mitch, can you touch on that a
well,
little?
it's just if I'm reading it right, they want to know if the son can be on the deed, correct? Not
Right.
on the mortgage.
Right. And they said that they did try to refinance the VA loan and wanted to add the son, but they were denied. We would probably need more information, wouldn't we?
Yeah.
There's different reasons why they would get denied.
Yeah, I just asked what state, and she said Nevada.
Mm-hmm.
Leonard, do you have any input on this?
I can't comment on Nevada law specifically.
Right.
It may be an issue of a person's credit score. And in general, I would think that it would seem to be something that most lenders would want more potential people that could be liable on it, but that's offset by the risk to the lender if something happens and there's not adequate insurance on the property. A lot of people don't realize that mortgage insurance, especially forced placed insurance, does not covers only the property being rebuilt. It doesn't cover general liability. So it's frequently a good idea to talk to an insurance company and get an umbrella policy if you're engaging in such a setup. So the umbrella policy will tell you what the basic liability policy has to be. And an umbrella policy is relatively inexpensive for the protection it affords to a prospective homeowner.
Okay, thank you, Leonard. Peggy brings up a good point. She said the lender told her that it was not allowed by the VA. And see, this is the thing. There's a lot of misinformation out there. If there's lenders that are not actively doing VA loans. If you get a lender that is only doing 1 or 2 VA loans a year versus a lender that is doing dozens of VA loans, there's loopholes in the system that not every lender is aware of. And also, it may be something regarding with the state, but as far as the VA, there have been people that have been put on the deed or have refinanced who weren't a veteran because it was a family member, and they were able to do it. Mitch, do you want to?
Yeah, I don't know why that would be. We've heard of it being done, and you normally the lender doesn't really have a say who goes on the title or any of that type of thing. If you own the house, you can put someone else on as the owner on the title as well. So it normally wouldn't even have anything to do with credit scores or anything like that. I'm not sure of if it's a state thing. He's saying it's from the VA. That I'm not aware of. And maybe it is some misinformation that the lender is in particular is putting out there.
I always say it's good to speak to 2 or 3 lenders, okay? Every lender is not capable of doing the same thing. Each lender is capable of doing different things. Now, there is a generality of what they can do, but depending on how many loans are done a month or a year, okay, the VA will give more discretion to a bank that is doing a lot of volume. So for example, if you go to a lender that is doing 3,000 VA loans a month, okay, 3,000 VA loans a month, and I know a lender that does that, because they're national. It's a national lender, and they do loans all over the country. That bank is allowed to do things that other banks are not allowed to do, because the VA will give them more leeway because they give the VA so much business. Okay, maybe that bank that Peggy used doesn't have the ability to have the discretion of the other banks because they don't do as much volume. So that's why I like to tell the veterans, listen, talk to 2 or 3 banks, see what each bank can offer you, and then go with the one who can give you the better deal. So that could be, what happened there, that they don't do a lot of volume. Okay, Mitch, I have another question here. They're asking about the credit score for a VA loan. Can give you the estimate, a range of the credit score and what they can do if the credit falls below that range.
Well, right now it's into the 5s. Before, when COVID hit, a lot of the lenders raised it up to, at one point, 660 was the minimum, then it was 620. There are a couple of lenders that are doing to the 500s right now. There are ways to fix your credit. There's certain scenarios that we run when we run credit for somebody, where that scenario shows us exactly what needs to be paid off and how much, in effect, that payoff will raise the credit score.
Okay, thank you. The other question I have is they want to know if they could use the VA loan for a condo. And I was in the process of chatting back and telling them, yes, you can use a VA loan to purchase a condo. However, the condo has to be on the VA approved list. Okay, if the condo is not on the VA approved list, normally we can get that condo on the list within 30 days. However, the building itself has to have 65% ownership. What that means is 65% of all those condos have to be owned by the owner. They cannot be rented out. So if 50% of that building has renters and the other 50% has owners, that building will not qualify for a VA loan. That means you cannot buy a condo in that building. And it happens so many times. And also, if you're working with a realtor that doesn't know that, what happens is you can get approved for your loan. You can go through the appraisal. You can go through the inspection. You can do everything that you normally do to buy it. But if it's not on the VA approved list, you could get towards the closing, and that's when the deal could fall through. And that has happened many times. And that's when people come to me and they say, oh, my realtor didn't tell me this. How come I didn't know? They didn't know it had to be on the VA approved list. The reason they don't know is because some people don't do a lot of VA loans. You know, they don't work with a lot of people that are used to the VA. So you have to make sure if you're looking for a condo, make sure to ask your realtor those questions. Is it on the VA approved list? And if it's not on the list, we can work with you to get it on the list. It takes 30 days, but you have to have at least 65% ownership. Mitch, anything?
No, you explained it very well.
Okay. Now, what's the maximum amount you can be approved for a place? That varies, okay? It depends how
By
much money.
county.
I'm sorry?
It's by county.
Okay, it's by county. And not only that, but also how much money they make, no?
Correct.
Right, so they have to be able to afford the mortgage. They have to make a certain amount of money. Each county will tell you what the maximum, I mean, you can go even up to $1 million on a VA loan, depending on the county. I know Northern New Jersey, you can go up to $1 million.
Yep.
Right, Mitch?
Yep. And it all goes by what's called DTI, which is debt to income. So that's the calculation that we use to see how much you qualify for, how much you make in payments per month, and how much money you have coming in. And on a normal conventional loan, it's normally limited to 45%. With the VA loans, there's more leeway there, and they'll allow you to go up to a higher percentage than the 45% that's normally allowed on conventional loans. But that's how normally you would look at, they calculate how much money that can be lent to you. It's based on how much money you pay out per month in expenses and how much money you take in.
Okay, thank you. There is another question, and they want to know if there is a list of preferred lenders. You can go to the VA website. On the VA website, there is you can find what condos are on the VA approved list. I'm not sure if there is a list of lenders on the VA website. There may be. However, if you all want to send me your email addresses, I can also send you some of the ones that I work with. And I do have a list of different lenders that I do work with. But I'm trying to read everyone's, oh, here's a question on bankruptcy. So they want to know if they could get a VA refi. They want to be able to refi their loan if there's a bankruptcy on their credit report.
Yes. You can get it if there's a bankruptcy on your credit report, and even if you're paying off the bankruptcy, you can get it as long as you can show that you've been making the payment for at least 1 year in a timely fashion. You can even get it if you're still paying off that bankruptcy. It's easier to get a VA loan or refinance one on a VA loan than it would be on a conventional loan. If you didn't have a VA loan on a conventional loan, you'd have to wait 3 to 4 years before you'd be able to get one.
I'd just
Now,
like to add on top of what Mitch said, that if you're in bankruptcy, you're going to have to get the approval of the bankruptcy of the standing Chapter 13 trustee and the court itself. And you're going to have a very good, compelling reason.
Leonard,
Correct.
while you're there talking about bankruptcy, be sure to be looking at the chats because a question came in. Sarah's saying that she's got good enough credit, but her ex filed for bankruptcy, failing to pay for a couple of bills that were assigned. Okay, you may want to answer that question. His name is on the mortgage and they want to refinance if they can get a better rate and get him off of it. In order to get somebody off, off the bankruptcy, I mean, what is this? What can Sarah do?
Well, if it's a joint bankruptcy, it would depend on what the bankruptcy is itself. I would need more details to provide a meaningful answer. If the person is if both people are on the bankruptcy, She'd have to get permission from, it's going to be, you can't have a situation where one creditor is favored at the expense of the others. So that could be very complicated. It's going to be very, very fact specific. And it will vary by bank, each bankruptcy court, and bankruptcy unfortunately is not truly federal. A lot of it is state, and certain states are very different from the rest of the country. So it would be state specific, and she would be well advised to consult with a bankruptcy attorney that's licensed in her state to see what is and what's not possible.
Okay, thank you, Leonard. Now, the VA loan can be used to construct a home or to build one if they buy the land. But the question here that I have is, can you use multiple VA loans to do so? Mitch, do you want to respond to that? Galaxy is saying he wants to construct or build and buy land, or he wants to buy multiple properties. Could he use multiple VA loans to do so?
Personally, as a company, we don't participate in the loans where you buy the land and construct it. We'll do new building that are already under construction by builders, but we don't do loans ourselves where you buy the land and you build on it.
See, that's a good point. Even though Mitch's company is one of the lenders that we use to do VA loans, here's a perfect example on something that his bank cannot do. And they cannot do this type of deal. So that's why I say it's very important that you speak to 2 or 3 different lenders to see what can be done with that bank. As far as I know, you can use your VA loan more than one time. However, you cannot have like 3 properties with all 3 of the same VA loan, because you have to actually live in the home of the VA loan. So you can use the VA loan more than once. Let's say you buy a property, you use your VA loan, okay? Then you refinance 6 months later and convert that VA loan into maybe a commercial, a conventional loan, or an FHA. Those are different types of loans out there. So you take it out of the VA loan. Then you could go buy another property. You could rent out that first property that you had. You could buy a second property. That second property, you have to live in that property if you want to use the VA loan. The VA will give you a loan if you qualify, with the credit and the money. But the VA is not going to say, hey, I'm going to give you a VA loan, but you don't have to live in the property. You have to live in the property minimum at least 7 months. Is that correct, Mitch?
Yeah, so let me just jump in. So to take out the VA loan, you do have to make it your primary housing. However, if you want to move and you have enough eligibility in your VA loan, you can move from that existing primary house, buy a new house, and use whatever's remaining in your VA loan for the new house. And if you want to rent out the house that you're moving from, you can, that can remain in the VA loan.
Okay, thank you for that. I'm trying to read all the questions as we're going down. Here's another myth buster here on my slide. Okay, I put a couple of myth busters. Mitch already discussed that you really don't need money for a down payment if you're using your VA loan. You could use your VA loan to buy a fixer-upper. Now, if it's a regular VA loan, the house has to be move-in ready, basically. Okay, it really can't have a lot of work that is needed to be done for a regular VA loan. However, there is a new product that the VA has that is called the VA Rehab Loan. And I'll let Mitch explain to you a little bit the difference between a regular VA loan and a VA Rehab Loan.
Okay, so a VA Rehab Loan is when the lender will lend you money based on renovations that you want to do to the house, And so they'll take into account how much you're borrowing for the purchase of the house, and perhaps lend you another $50,000 on top of that if there's renovations that need to be done to the house. Obviously, there's a little bit more to it than just a regular loan, but and there are certain guidelines that have to be worked within, and certain contractors that need to be licensed to work with. But that's pretty much it. You buy a home, they'll lend you some money on top of that to renovate it and make certain improvements to the housing that may make it more livable or even more appealing for you to live in.
Okay, thank you, Mitch. Another myth buster is that you have to be working to get a VA loan. Now, I know it may sound like we're double talking, but we're not, because if a veteran is 100% service connected, that veteran is making enough money from the pension that they're getting from the VA to be able to purchase a home, and they're not working. However, that veteran is only going to be limited to a certain price range. So that's why I say that you don't have to really be working if you're 100% service connected, because the money that they get qualifies them for a home, but it's going to be a smaller home, number one. The other thing is the veteran cannot have a bunch of debt. Now, if that veteran owes a lot of money, and on the credit report, there's tons of things owed by the veteran, then even though the veteran is 100% service connected and getting about $4,000 a month, he's still not going to qualify, because the credit score has to be a certain amount and he cannot have a lot of debt as well, right, Mitch?
Yeah, that goes back to what we were discussing earlier about the DTI and the debt to income. It's all about how much money you have coming in and how much you have going out in your monthly payments, whether it's credit card debt or anything like that. So you can only have a certain amount going out compared to what you have coming in. So like I said, so in Rebecca's scenario, if you have 4,000 coming in every month, but you have $2,000 going out in credit card debt, and that would be before your house payments, then that you would probably be going above the DTI. That would limit you to getting the mortgage on that type of DTI. Now, if you were getting in $4,000, but you had $750 in monthly expenses, then now it's more in the ballpark where you can do it. But everything goes, it's not about whether you're employed or not, it's about, are you getting income, whether it's disability income. um, it doesn't matter. If you're getting disability income, we can use that as income. It's all about how much you're taking in and how much you're paying out on other debts.
Okay, so let's say they used their VA home loan in the 80s and it was foreclosed on back in the 80s. Can they use their VA home loan years later?
As a
And they,
general, I'm sorry,
no, go ahead,
Mitch.
Leonard.
As a general rule, if your bankruptcy is more, you can only file bankruptcy every 8 years. So if your bankruptcy is 10 or 20 years old, it should not matter. And I don't think it would matter to a conventional lender. I would think it would be, it's what you've done with your credit and how responsible you've been since your bankruptcy is over and how you've reestablished your credit.
Is that for bankruptcy? What about the foreclosure?
The foreclosure is history, because the fact is a foreclosure will stay on a credit report, but the credit report is not a legal document. A title search will show what debts are really still viable and valid. Uh, the foreclosure is really of no legal significance at that point. It's especially something from the 80s or anything 20 years old is not going to matter.
Okay, thank you, Leonard.
Thank
Now,
you.
to answer another question, they want to know, how long do you have to be on a job? Or how long do you have to own your own business in order to be able to qualify for a loan? And this question comes from California, Mitch. How long do they have to be on their job?
If you,
Or how long do they have to own their business in order to be able to qualify for a loan?
if you own your business, generally, the general answer is 2 years. They'll want 2 years look back on a self-employed person. If you're currently employed by W-2s, it will go by individual cases. You need to be able to prove that you're currently employed and to be able to show a VOE that that employment will continue on. You'll need to get letters from the employer to show that that will be ongoing. And it's a lot easier when it's not your own business. When it is your own business, you generally would have to show 2 years. And in our scheme, we have to show 2 years history of that self-employed person.
And not only that, but they also have to have a CPA, a certified public accountant.
Correct. And
Like one of this, Joe Blow over there, just that can do taxes. It has to be a certified accountant when it's your own business.
right. And generally, and the reason the taxes come into play when it's your own business is a lot of times you say, oh, well, I made $80,000 last year in my own business, but what you're not taking into account is that you're writing off maybe 70,000 of it. And I can't tell you how many times self-employed people have come to us and said, well, I made this amount last year. And then when you take a look at their taxes, sometimes they didn't make anything on their tax returns because of everything that they wrote off in expenses.
That's a very big problem, okay? If you work for yourself and you think you want to buy a house, then you've got to show, what you're really making. I've got a guy that makes over $200,000 a year, okay? He could show it with his bank statements, but he wrote down on his tax records that he makes $25,000. I can't get him a house. No bank is going to approve him. Now, there is an exception, okay? If you want to do a no doc loan, that means no documentation, you've got to put down 15 to 30%. Is that right, Mitch?
Yes, but that's not VA.
Oh yeah, that's right. I'm sorry. Okay, that's not VA. That's right. I'm just giving them another option
Right.
in case they want to, in case they they want to buy a house, not VA. There are different options, but I guess that would
Yes.
be a different webinar. Yeah. Okay. So so you've got to show what you make if you want to be able to buy a house. I have a question here about the student loans. The federal loans, yes, but if they're behind on their student loans, what can be done? And this probably is a question for both Mitch and Leonard.
Well, if I may, in New Jersey, there is a trial level bankruptcy court decision where student loans were discharged. But as a general rule, while there is a tendency towards moving towards discharging student loans, the last time student loans were automatically dischargeable in bankruptcy was 1994. And right now, you would have to show extreme financial hardship with no likelihood of improving. So currently, with rare exceptions, you literally, and I mean this literally, you literally have to have 1 foot in the grave and 1 foot slipping into the grave so that you have no prospect of improvement. And there are people, there was a case a few years ago in Oregon where an attorney who graduated an ABA approved law school and passed the bar exam could not get a job, and only a percentage, I think 70 or 75% of his bankruptcy debt was discharged, and he fought that for 10 years. And you have to show in order to get any type of discharge for bankruptcy that you made a good faith effort to pay the loans. But there's a lot of controversy as to whether the bankruptcy code will be amended to discharge student loans or whether, whether in part or in present. Some lenders may or may not, care about your student loans. Mitch would be able to speak more to that, but I would recommend that nobody try to take a loan where they have to pay more than 31% of their net income, net disposable income, for a mortgage payment, because there are too many emergencies that come up in life.
Mitch, you want to piggyback on that? Or are we good?
Well, I mean, there's very little that we could do if you have the student loans. If they're on the credit report, they're on the credit report, right? And we can't take off of that. What even if it's in like now, um, they're deferred quite a bit. We would need to, there are times where if you get a note saying that it's deferred for X amount of time, then they may take that into account and allow us not to use that against your debt to income. But otherwise, even if there's no payment showing up on the credit report, if there's no minimum monthly payment, we'd have to use a 1% of that, of the amount per month as a payment against your DTI.
Okay, thank you, Mitch. Can we go to the next slide? We're doing our best to try to answer all these questions. Keep the questions coming. That's why we're here, to answer the questions as best as we can, and we'll try to get to everyone's question. If for whatever reason time ends and we're not able to do that, we'll have our contact information at the end, and you can reach out to us via email to get some of these questions answered. But what we're doing is we're going down, reading the questions, and trying to answer them as we're reading them. And go on, do the slides. And you know how we do in the military, right? We do everything all at the same time. Okay, so I put down here 5 VA problems that are common, and that the VA will not give you a loan if you have these type of things. When you're going to look at your beautiful home that you want to purchase, and you notice that when you do the inspection, there's termites. Okay, you want to talk about that a little bit, Mitch?
Yeah, well, this is one of the, I mean, the VA loans are a little bit more strict when it comes to certain things and repairs around the housing than other loans. That's one thing they are. So yeah, as the 5 here you have are great. Termites, I mean, this is the only loan where you have to have a termite inspection to make sure that there are no termites, and you'd have to get an exterminator in there, and it would have to be sorted out before they would approve a loan for that. The insufficient heating, electrical system, roof and disrepair, broken windows, all great things that you wrote here. And they would all need to be repaired before the lender, and the lender would need to see that these repairs were done before they would lend on that.
Okay, thank you. And also, not only that, but the VA won't let the veteran pay for the termite inspection.
Correct. The seller has to.
The seller has to pay. It's about $150, but usually what you can do is an inspector, okay, normally will have the termite inspection done at the same time that the home inspection is being done. And normally they try to throw it into one price. And the VA won't allow the veteran to pay for the termite report. Okay, I had another good question here that said that somebody is doing a rent to own and they're renting the property. They want to do a VA rehab. What I told the person is that they can do a VA rehab if they purchase the home. But the thing is, if they're renting to own, that home still belongs to the owner. If you're doing a rent to own, you don't own the home. So it would be highly unlikely that the owner would allow you to do repairs or big major renovations to their home if you don't own their home. You don't know how many times deals have fallen through. Okay, I've had deals fall through the day before closing, right before to hand the key to the buyer, the day before the deal falls apart. So when you're doing a rent to own like that, the owner could change their mind a couple of years down the line. And then what are you going to do? You did all the work for the owner, and now he's got like a new house, and now he wants to renege on the deal. Leonard, you want to talk about that in case a veteran finds himself in that type of situation?
Absolutely. You need to avoid that situation like the plague. It's just like trying to buy furniture through Aaron's. It's bad news. You don't know anything about the solvency of the underlying owner. They could be foreclosed on. There's a lot of ways those deals could go south. And in the state of Texas and Arizona, they're very widespread, but in most other states, if you try to do that, they'll look at you like you have three heads. And in many cases, it's considered an illegal scam. It's different if you know somebody is solid and it's a lease purchase option and a certain amount of money is being credited each month towards the purchase of the price of the house. But I would tell anybody to avoid it like the plague. You're better off. There's other better ways to purchase property, which would be beyond the scope of this webinar. But it would behoove someone to educate themselves on alternative legal ways to purchase property rather than any kind of lease purchase or rent to own. And I would always discourage a rent to own because it's a scam and you're paying far more and you have no security and little to no protection, if any.
Thank you, Leonard. Okay, can we go to the next slide? Oh, okay. This video goes in perfect with a question that I just had from Fran. Fran wants to know, when is the right time? But the thing is, there's really never a right time, because if you wait for a right time, you won't purchase. But this is what's going on right now with the market. I don't know if we can hear that video, Melissa. Can we get back to it or no? Because I don't think everyone was able to hear it. No, we really can't hear it, but I'll tell them basically what's going on in the video. That's me talking to a phantom buyer, and the phantom buyer is saying, Rebecca, I want to buy a house in New York. So I draw the offer. Then they say, no, withdraw. I want to buy in New Jersey. No, they withdraw the offer. I want to go Florida. It's hot there. So I withdraw the offer. Where there's a real estate frenzy. There's tons of offers being put in right now. People are going off the hook. They're buying houses. There's lots of bidding wars. And they say, oh, we've never seen anything like this. But that's not true, because the real estate market goes up and down, up and down, up and down. Okay. In a couple of years, it'll be the same, slow, fast, slow, fast. I mean, there's never a right time. If you need to move and you're renting, it's always better to buy than to rent, because what you're doing is you're paying somebody else's home off, and you're never going to get that money back. Versus if you buy a home and you refinance in 6 months, you can do a cash out and you can get money and pull money out of your house. You could never do that if you rent. Mitch, can you talk to them a little bit about cashing out?
Sure. Well, cashing out basically is depending on what you bought the house for. As the prices go up and you have more equity in those houses, you can take out a portion of the money of the equity that's in there. And now for a VA loan, you have much more leeway than a regular loan. For sure, you can finance up to 100% of a home, as we know, Rebecca, right? And so as long as property values stay stable, um, over the course of time, you will gain equity in that home. And the more equity you have, the more borrowing power you have against it, where you can actually get cash out against the equity.
Thank you, Mitch. Leonard, here's a good slide where I think you're going to come in to answer a few of these questions, because believe it or not, it's where time is going fast. It's almost 4 o'clock already. Time flies when you're having fun. But Leonard, if we have a veteran that is behind on payments, okay, what can they do? What are some options out there for the veteran?
Probably the best option is to consult.
Raise the volume, please.
Probably the best option is to consult an experienced mortgage foreclosure defense and bankruptcy attorney. Um, I don't know, I can't speak personally as to whether a VA loan is the least likely to go into foreclosure or not. However, there may be provisions of the Soldiers and Sailors Relief Act that can help out a veteran. A short sale is a sale where the bank agrees to accept less than the amount owed on the mortgage. And in doing so, they will forgive any deficiency. Now, what I do, I save an average of 20 to 30 houses a year for my clients. And the most powerful way is in states like New York and New Jersey and several others where the bankruptcy court has a loss mitigation or mortgage loan modification, as most lay people refer to it. Now, in a mortgage loan, when you file a Chapter 13 bankruptcy, you file a motion also to get admitted to the bankruptcy court's mortgage modification program. During that time, prior to being approved or disapproved, you would make your monthly payments to the mortgage company for the full amount of the most recent payment. Now, if you're approved for a trial modification, you would make 3 to 6 payments prior to getting approved for a permanent modification. And if you're approved for a permanent modification, it's likely to be a 40-year mortgage at prevailing rates. But I tell all my clients, never ever expect a principal reduction. Can it happen? Yes. Does it happen very often? No. But if it does happen, treat it as a gift. But there's one thing that's very much misunderstood, and I want to really address it, and that's the issue of forbearance. Forbearance is not your friend, it's your worst enemy. It's like being embraced by a hungry grizzly bear. Even if you're in a Chapter 13 bankruptcy and you're making your planned payments, and everything is current, a lender can foreclose if you can't write a check at the end of that forbearance period for the specific amount that's due in full. They do not legally have to extend your loan or put it on the back end. Some will, some won't, but for the most part, stay away from it. Anytime you have a legal problem, you need to talk to an attorney. Only attorneys are licensed in almost all states to give legal advice. And the last thing you want is bad advice. And I've seen even on attorney websites, there's a lot of misinformation. And if you have any doubts, check out the track record of the attorney, check out their testimonials. It's the same thing for any professional. Don't assume merely because a professional has certain experience or credentials that that's totally real. Check out the reputation of that professional, any professional. And you talk to people who've used that professional, both those that are happy and those that are unhappy. Nobody's going to please everybody. There's always going to be somebody you bend over backwards, you do great work, and they don't appreciate it. But the thing is, ignorance, as the old saying goes, ignorance is no defense in a legal situation. And what you don't know can hurt you, and it can hurt you badly.
Thank you, Leonard. Can we go to the next slide, Melissa? Okay, we touched on this earlier. You got to check your credit score. It's like 580 up to 580. However, you have to have, very little debt. Mitch talked about it. You have to have certain income. You have to be working at least 2 years. Every situation is different. So there's really not a standard box, okay? Your 2 years of taxes, things like that. Anything I forgot on that slide, Mitch? Mitch, anything I forget on that slide? If when a veteran's going to be looking to qualify for a VA loan?
No, I think you have it covered.
Okay. I hope you guys are liking these pictures. That's my little girl and my dog. I try to be creative, because I made that little house igloo of snow there, to make a little joke. If you're not having good credit, you're not working this and that, you could wind up over there, in a little igloo with her, with the dog. Okay, can we go to the next slide? So basically, even though I do work with Keller Williams, I call my team Homes for Vets. Okay, I love to work with vets. I'm a vet, and another reason that I love to work with vets, it's because they could deal with me and I could deal with them. I could be myself. I don't have to get all dressed up fancy. I could come in my sweats. I could come in my shorts. I do place homeless veterans into apartments, and sometimes people don't know who's the homeless veteran, me or the other person, because sometimes, I dress down because I don't know what I'm doing that day. If I have to, on an emergency basis, place a homeless veteran, I don't want to be all dressed up to make the veteran feel bad. So I don't know how I go. You take me as I am. Some people will take me as I am. Some people don't. I mean, some people look down on me, some don't. But what you're going to get is you're going to get an honest person. I've been around the block. I've been doing this for years. Just last year, I sold 16 properties. And this is something that I love to do. And I give back to the community by helping our homeless brothers and sisters getting off the street and getting them into apartment. And some of my best success stories, okay, are these homeless veterans that I help them get into apartment. We help them with their credit, and then they went and they purchased their first home. Okay. And we have a lot of those veterans because we don't leave them. We stay with them. We stay with them and help them. It's not easy. I'm going to tell you, it is not easy. You have to work to get your credit well, right, Mitch? What are some of the things that they would do to get their credit better?
Well, most of it is just paying off the monthly payments, and you don't want to have, if you have $1,000 credit limit on a credit card, you don't want to be carrying $1,000 a month, the full credit limit against it. You want to have down to maybe using 20-30% of the amount of your limit, normally, or 10, really generally 10% getting down. So if you have $1,000 credit limit, you want to be able to show that you're paying off and keeping maybe a balance of $100 or $200 on there all the time. But if you have all of your credit maxed out, that's gonna put a big hit on your credit score. And
Okay.
obviously you have to pay your bills on time, and they keep track of everything that's more than 30 days late.
And if you're late one time on your mortgage, you can't really, for one, right, Mitch? They can't be late one time. Otherwise, they got to wait an entire year. Isn't that correct?
Correct. Well, there may be a little bit more leeway there if it's 130 day lateness, but in general, yes, you're right.
If I may add, I agree with everything Mitch says, but it's even more important that you, if at all possible, you make sure that if your payment is due on the first of the month, just because the lender has the payment in-house, if it's not posted to your account, you could be treated as if it's a late payment. So I try to tell people, especially my clients in bankruptcy, try to make sure that it's sent at least a week before. And it should be, I recommend certified mail, return receipt requested. So you have proof that the lender got the payment.
Okay, thank you, Leonard. Melissa, are we about done here or?
Yeah, we could probably go another hour, but it's fantastic information. But I do want to remind everyone that this is being recorded and it will be shared with you, the link. And also too, Rebecca, if you want to just go ahead and just plop your contact information in the chat. But when I do send out the link, I'll also include Rebecca's contact information. Actually, I'll include everybody's, Mitch and Leonard's information in that email. So that way, if you have any follow-up questions, you can reach out to them directly. And Rebecca, Mitch, and Leonard, I want to thank all three of you for this very informative session. It's always, good to hear, good information. And I know we had a lot of questions. I don't know if were able to get to all of them, but again, they'll have the link, they'll have your contact information so they can reach out to you all directly.
Thank you, Melissa, for
Thank
making
you.
this
Thank
possible.
Thank you, Melissa.
Absolutely. Thank you, everyone.
Thank you.
Take care.
Okay.
Have a good day.
Bye.
Bye-bye.